Hi everybody, welcome back to Ox Talks. It is November 2nd, 2023. Thank you all for tuning in, watching the show. If you like the content, please consider subscribing and spreading the word to your family and friends, hitting the like button and all that good stuff. I really appreciate it. Well, the markets closed about an hour ago, and they continue to be totally detached, in my opinion, from the reality on the ground. The Dow put on a gain of almost 2%. I thought I was up 564 points. The NASDAQ was up 232 points, and the S&P was up about 80 points, all putting on, again, just shy of 2% gains across the board. Obviously, this is on the back of the FOMC and the Fed meeting yesterday, where Powell kept the rates unchanged. The markets took that as a signal that he is going to keep the rates where they're at, or even begin reversing course in the near future. And today, from my perspective, was all once again based upon this whole idea of hopium, and it sure juiced the markets. But I'll tell you, a lot of big names out there are not in agreement, are sounding the alarm and suggesting that the Fed is definitely not done. One of those people we talk about often on this channel is Jamie Dimon from the Insider Today. It's the JP Morgan CEO says he suspects the Fed isn't done with interest rate hikes. And that's just hours after Powell hit the pause button. That's the title of the article. It says, Dimon told Yahoo there are still chances for the U.S. Monetary Authority to raise benchmark interest rates by 25 percentage basis point up to 75% basis point hike. He says, I just think there's a higher chance than probably other people think, he stated. I think there's a chance that inflation is just a little stickier than people think, and their fiscal and monetary stimulus in the last several years is more than people think. Unemployment is very low. Obviously, when he comes out and makes these comments, he has to be somewhat cryptic because he doesn't want to cause a reverberation in the price of a JP Morgan stock. But obviously what he's saying here is, from his perspective, the Fed is definitely not done. I saw on CNBC today, the Target CEO, Brian Cornwell, says shoppers are pulling back even on groceries. It says, Cornwell says shoppers are pulling back even on groceries as they feel stressed out about their budgets. In an interview with CNBC's Becky Quick that aired Thursday morning, he emphasized that the retailer has posted 7 consecutive quarters of declining sales of discretionary items such as apparel and toys, in items both in dollars and in unit terms. And he says, but even in food and beverage categories over the last few quarters, the units, the number of items they're buying has been declining, he said in the interview. And it says, with the comments, Target doubled down on a cautious outlook as it gears up for the crucial holiday season. The retailer cut its full year sales and profit expectations in August, despite a growing number of economists delaying or scrapping calls for recession. Obviously, we know Target got caught up in some other stuff earlier in the year with products it was putting on its shelves, which caused some controversy as well. But the CEO is saying that consumers are slowing down on buying essential items. Now, is Target the cheapest place to go shop? Probably not. You probably have the lion's share of the Walmarts picking up those kind of shoppers. But nonetheless, this is another warning sign. It's definitely not consistent with a 2% gain in the markets today. And lastly, the most important article that I saw come through today is from Jeff Gundlach. And he is a big name. When he makes statements, the industry listens And what the title of this article is from the Business Insider, says all the signs are pointing to a recession that'll cost Americans their jobs. Veteran bond investor Jeff Gundlach says layoffs are coming. And he says the U.S. economy is clearly headed toward a recession. The DoubleLine Capital CEO said Wednesday that the yield curve, a bond market gauge that measures the gap between the 2-year and the 10-year Treasury yields, is signaling that a downturn is coming. Quote, he says, quote, "This is the classic action that one gets prior to recessions," he added. "You get a yield curve that inverts. People talk about that. It's very inverted, but it hangs there for a long time. Recessions typically happen when the yield curve de-inverts after being inverted for around a year," Gundlach noted. Inversion of the curve means that the short-term dated yields rising above the long maturity ones, which is against what's considered normal in the bond market. Gundlach flagged the U.S. unemployment rate, which is still hovering below 4%, but recently moved clear of its 12-month moving average, as an economic indicator that's starting to look, quote, very recessionary. He says the next signal a downturn is coming could be Americans losing their jobs, he added. Several big tech companies and top investor banks have slashed their headcounts over the past 2 years, but most other industries have so far steered clear of cutting staff. And in closing, he says, "I really believe that layoffs are coming. We've seen hiring freezes, and now we're starting to see layoff announcements. Not en masse, but they're out there for financial firms and technology firms, and I believe that is going to spread." On yesterday's show, we talked about the 2,000 plus workers being laid off by Schwab. So look, all of these big name titans of industry leaders are saying exactly the opposite of what signal the stock markets are putting out there. So something for you all, of course, to keep in mind. If you were simply watching CNBC or the nightly news, your takeaway today would be that everything is fine, the economy is doing well, and there's nothing to worry about. I would suggest and urge that you consider the other sources of information that directly contradict that. Again, going back to the idea of layoffs, Gundlach says layoffs are coming, more layoffs are coming. Will that affect you? How could that impact you and your job? You need to, in my opinion, to repeat the theme from many of my shows, is consider starting your own business. If you have an existing business that you're in and you have partners, or if you are looking to buy into an existing business that has partners or other shareholders or other members of a limited liability company, I would urge that you keep in mind protecting yourself from the downside risk of a shareholder or a partner in your business having an unforeseen event. And this is where I'm tying this a little bit into a legal, a little excerpt on a legal education, if you will. And that comes down to the concept of having a shareholder agreement in place, or what's often referred to as a buy-sell agreement. So what that means is, what happens if your partner has a heart attack? What happens if your partner or one of them dies or becomes disabled? What happens if one of them has a substantial financial downturn or a personal bankruptcy, or gets involved in some litigation unrelated to the business and suffers a substantial money judgment or something against them? All of those things could impact the business operations. If a partner dies, you're going to be dealing with the partner's spouse, who will have to deal with the partner's estate and what interest the partner had in the business. If the partner becomes disabled and cannot perform, their daily functions for the business, what kind of safeguards and provisions and agreements do you have in place to address those issues? It comes up all the time in my practice. And usually the way you do that, number one, you address it ahead of time. You cannot, of course, buy fire insurance after the fire has already happened and burned down the structure. You have to put these agreements in place ahead of time. And so you have to contemplate what kind of events would trigger a buy-sell provision, meaning giving one partner the right to buy out the other partner's interest in the business. For example, if there's two partners in the business and one dies, the surviving partner, who probably will want to consider carrying on the business, has to have an understanding of how they're going to value the deceased partner's interest in the business or the company, and how they're then going to pay or capitalize to buy out that partner's interest. So you have issues of certain trigger events, and then you have issues of valuation. And how is the surviving partner going to pay off the departing partner, whether departing because they died, departing because they're disabled for a long period of time, or departing because they get involved or embroiled in some other separate major financial matters. So you have to value the interest in the business. Many partners or shareholders agree to do it at the time that the event happens. You get an appraiser, or you get a couple of appraisers to value what the business is and what that respective partner or shareholder's interest is. And then the second big concept you have to keep in mind is, how is the surviving partner going to pay for it? Is it going to be through a promissory note with some money down? Is there any life insurance in place that will provide the necessary liquidity to buy out that partner's interest? And how's that going to impact the overall operations of the business? I know I'm getting really in the weeds on some of the intricacies, but it doesn't matter whether you're a corporation and you have other shareholders, or you're a limited liability company and you have other members, or if you're a partnership and you have other partners. These things can happen, and usually they're unforeseeable. So think about getting a good business attorney in your state and jurisdiction if you own a business where there are other owners, and start to conceptualize these issues now and plan ahead so there is a seamless, to the extent possible, transition if something like this happens. With that being said, I'll keep it there. It's about 12 and a half minutes in length. Please make sure you get your workout in today. Get your 15 minutes or half an hour of cardio in. Go walk around your office building a bunch of times, or get some steps in. Please consider getting your push-ups. Well, don't consider, get them done. Get some push-ups in, get your sit-ups in, make yourself strong. It's really important that we stay strong, we stay healthy. I got a comment on one of my videos last night from, I think, a nurse, and she said health is wealth. And I completely agree with that. Couldn't agree more. With that being said, all of you have a great evening, and I will see you tomorrow. Bye.